Good evening. I wanted to make a relatively shorter video, an intra-week update on what I'm expecting specifically on the indices and the dollar index going into the rest of the week. Well, basically Thursday and Fridays trading days is basically what I'm talking about. So starting off with the E-mini S&P 500, as the week began, I did point out the fact that I was paying attention to this daily sell-side imbalance by side inefficiency, the BC residing here between this candlestick's low and the candlestick high right there. We have this inefficiency, this gap that I was expecting to see a possible rejection from. Yes, it's not in the premium when you compare it to the NASDAQ, but it's the only premium array that I could see right here. When I say premium, I mean measuring from the previous swing low to the previous swing high. We got that. So I guess in a way it is in the premium, because if you notice, when we measured the range from the high to the low, it did tap exactly at the 50% of this range and rejected from there. So of course this rejection is not aggressive enough because we have not swept the previous day low. But going into tomorrow, going into Thursday, I'm expecting this low to be swept as the low-hanging fruit going into tomorrow. Then going through that, we have the sell-side liquidity residing at the swing low there, and going through that, of course, we have the sell-side liquidity there that we highlighted from the weekly outlook video. So I'm paying attention to these sell-side liquidity levels, but one level at a time. So right now I'm expecting the previous day low to be swept and the swing low residing there by Friday. Moving to a lower time frame, I'm going to jump the hourly. Well, I don't really need it, but I'm going to jump the hourly and go down to the 15 minutes because we have a very specific level that I was paying attention to, that I thought we were going to reach actually when we had this first displacement to the downside during the AM session before lunch came, and we got this weird reversal and drop off again. I was expecting this specific level here, and for many it might seem random, but for me it's not really a random level. It's basically these two candles low that was formed at 9 o'clock and 9:30. We have those two candle lows, and if you look closely, you would notice that these candles actually have perfectly equal lows. You can look up there where we have the open, high, low, close. Pay attention to the low number or figure, and you notice that the low of this candle is 5063.75, and the low of this candle is the same, 5063.75. So these are perfectly equal lows, and that's my draw on liquidity going into next week. I've already mentioned that, going into the next day, tomorrow, I've already mentioned that I'm looking for the sell side liquidity on the previous day low, which is basically somewhere here. And going through that, of course, we have the Monday low, and through that we have the swing low that we have down there at the bottom of the range. So I'm expecting us to incrementally push lower into the sell side liquidity levels. But one thing that I wanted to use as a supporting factor on this idea is the dollar index. So before we continue to NASDAQ, let's stop quickly with the dollar index. So looking at the dollar index from the daily time frame, we can see that we are still bullish. Well, I'm bullish to fill up this volume imbalance / liquidity void. I want to see price trade higher into it, and going through that, I wanted to see these buy side liquidity levels being tagged next. So right now we have not tapped into the 50% of the range the way I wanted. I wanted to see if we could tap lower into the 50% of the range to continue higher, and that could still be the case, but I saw certain signatures on a lower time frame that made me think we may not get that. on a 4-hour perspective, this was basically what I was looking for. I was looking for a liquidity sweep, trading below the 50% of the range from the low to the high, as we just pointed out from the daily time frame. And I wanted to see if price could firstly respect this 4-hour fair value gap, trade lower into discount, and then we can look for buy setups going into Thursday and Friday. Of course, we didn't get that. I'm not sure if we will get that, because we might still get it. But if we don't get it, then I'm looking for a possible expansion from here, because something to notice at this point is that we have actually disrespected this fair value gap. If you notice, we got a candle closure above it when you draw it out in time. We close above it on this candle, we close above it on this candle, and this one as well. So these are not signatures that I would like to see if I'm expecting lower prices first. Of course, I wanted to see a discount level before pushing higher, but we just disrespected this CB, which makes it now become an inversion, and we are actually now respecting this BC, which makes me think we might use this as a push to the upside to the buy side liquidity levels that we just highlighted from a daily perspective. Of course, to confirm this idea, we would have to wait for a 15-minute shift in structure, because we are dealing with a 4-hour PDRA. So we don't have that yet, and we are likely going to get one more liquidity sweep of this sell side, then get the market structure shift during London session to get a setup to take us up to the buy side liquidity. So I'm expecting bullish prices on the dollar, which means I'm also expecting bearish prices on the indices. Now we can move on to the NASDAQ. Starting with the daily time frame, we noticed that we did not tag into the premium side of the range on NASDAQ, because if we measure from the previous most recent swing high to the previous most recent swing low, this was basically what we got. This was basically what we got. We didn't really tag into the premium portion of the range, but we did tag into this tiny inefficiency, this tiny fair value gap here on a daily time frame. So yes, we didn't reach the premium section, but that could be considered an SMT divergence in a way, because NASDAQ failed to reach the fair value gap that E-mini S&P 500 reached. So I'm expecting lower prices. Of course, now we've just created this daily bullish fair value gap here. I'm expecting this bullish fair value gap to be disrespected tomorrow. In other words, I would like to see us close below this fair value gap residing here. I would like to see us close below, probably use it as resistance to continue lower and targeting the sell side liquidity levels that we have highlighted numerous number of times, especially during the weekly outlook video. So on NASDAQ, I'm looking for a very specific feature, characteristics or traits on the 1 hour, because on the 1 hour we actually have an SMT divergence at the highs up there, where basically let's see if we can bring it up quickly, where ES took the high, did not take the highs, while the other three did. Bringing up the three of them side by side, we are able to see that at the highs there, S&P 500 failed to take out the previous day high, and NASDAQ did that, and Dow also failed to do the same. But of course, Dow is just an extra confluence. I'm mainly paying attention to these two. So this SMT divergence makes me believe that it is a smart money reversal at the highs of a market maker sell model. So going back to NASDAQ quickly, I will come back. I've already drawn liquidity on E-mini S&P 500, but let's continue with the NASDAQ. On the NASDAQ, we have an SMT divergence at the highs. We have a sell side liquidity target right there at the low. So now what I like to do is to grade the market maker sell or buy model from the low to the high, and basically divide the entire thing in quarters. The person I probably going to try and link a video in this one's description on where I learned the grading for market maker models, but it's basically as simple as the 25% having the smart money reversal, which we are looking to get, which it looks like we're getting right now. The smart money reversal at the 50%, we likely get a high probability order block, and we would like to see price displace through the 50%, giving us the conviction that we are likely to push lower. And then of course the 75% is the one that runs the quickest, which is the second stage rate distribution. So I'm looking for a displacement through this 50% area of the market maker sell model range. What's coincidental about this area is this fair value gap. We have a buy side imbalance, sell side inefficiency residing there. Right now it's a BC, but I'm looking to see if we could get a candle close below this BC, and with that happening, we could possibly see a high probability order block form within this area, the 50% area. And when we do get a retracement, I would look to see if we can find selling opportunities to take this to the sell side liquidity levels down there. So that's my view on the indices, what I'd like to see on NASDAQ, and what I'd like to see on the E-mini S&P 500. I don't really trade the Dow, so I'll be focusing on that the most right now. And RTY, which is Russell, has already done what I needed it to do this week. We have not tagged into the equal highs, but we're probably gonna reach that tomorrow, because this isn't really following what the tech stock indices are doing right now. So I'm just going to not pay attention to that. Measuring the range from yesterday, the previous daily range, which is Wednesday's high to Wednesday's low, we are able to see that we have also closed below the 50% of yesterday's range, and this low on a lower time frame are the perfectly equal lows that I am targeting. So I'm expecting us to create some sort of 1 hour fair value gap within this area, and then a retracement during London session, and a continuation lower. But my final target, of course, is the sell side liquidity at that level there. And of course, we take things gradually, one step at a time. So that's my view, what I'd like to see, what I'm expecting. So for now, stay safe, look after yourselves, look after those you love. Good luck and good trading.